Businesses fail for running out of cash, not for lack of profits.
So profit is not cash then?
Profit is never cash, because profits is just one person's view at the time.
Is HMRC using AI at the moment? Because I believe they're investing in it quite a lot.
I read recently an article that they bought 28,000 Copilot licenses. Is it a lifestyle business, Mike? Or are you going to build a business you want to sell in the future?
Right, welcome to Work Together Worlds Apart, and today we are very excited to have a bonus episode. So we've got with us Stuart Rosenberg. Welcome, Stuart. Stuart's an accountant, a business advisor with a specialism in tax disputes. And we weren't actually supposed to be recording this today, but circumstantially we're able to get Stuart in the room, so we're really excited for today. So Stuart, just want to start by giving us a bit of an overview of your experience in this accountancy and tax world.
I've been in the accountancy world for probably too many years, but you get to see different things. So the portfolio of clients I deal with now are predominantly SME, franchise operators in the QSR, quick service restaurants. And then you take my experience into dealing with tax disputes and the human relationship with HMRC. And that's where a lot of my work now comes from, and dealing with problems and problem solving.
Fantastic. And I think obviously this podcast, we've been going for about 9 months now, and obviously we talk very kind of in raw terms around mine and Mike's business journey and experiences, and often finances, tax, accountants come into the conversation. So really, can you just give us a bit of a deep dive into generally within businesses, where do they generally go wrong with their finances? What are the things that they do wrong from the start, which can then have compounding effects as they grow?
You can take this from experience, the experience of seeing what different businesses go, where they go wrong, but they go wrong generally for the same reason: run out of cash. And why do they run out of cash? Because people try and equate profits to cash, and that's where the businesses tend to go wrong. People don't project properly. They can be over excited about their business. They can overpromise and underdeliver. And you see a mixture of all these factors where people take profit as equaling cash. As I said, that's where we see the biggest problem, and not understanding working capital management.
So profit is not cash then?
Profit is never cash, because profits is just one person's view at the time. And don't shoot me for this, but you give me a set of figures, Mike, I can probably come up with 3 different profits, and as long as it agrees to the accounting principles. So a lump of cash could be used for buying an asset, but once you've tied that asset up in cash, or tied the cash up in the asset, where's your cash to pay the day-to-day working capital? So people run out of working capital very quickly.
It's really interesting because if I split up my business journey into, let's say, 3 segments, I'd say the kind of first third, it was turnover. The second third was profit. And the last third, which is pretty much where I am now, is cash. Now, that's not to say I don't care about the profit or the turnover, but actually I found that if you focus on the right things, like you say, cash is king, then I think a lot of the things do often fall into place. There's a real mindset about focusing in the right areas.
Profits for vanities, turnovers for sanity. You see so many people chasing the vanity, the profit. Quality of turnover, that's the issue. What does it cost you to do business? Each time you do business, what does it cost? People don't look at that. And sometimes in doing that, they feel they've made a profit, but they don't actually know what they've really made, because the costs that have gone into it are lost.
Yeah,
You've got the human cost, the time cost, the salary cost, but there's also the opportunity cost. Yeah. What could they have been doing in the next better opportunity?
Every year, companies will have their kind of annual general meetings, and they'll say next year we're going to increase by 2.3%, 5%, 10%. And actually the year just gone, we kind of turn that on its head, and actually our target is to not grow at all in terms of turnover. But what our target is for this year is profit margins. So Absolutely. Actually, if our plan goes correctly, we will not make more turnover this year, but our profit's going to double. And actually, for me, I think I was so focused on chasing big numbers that you forget the most important thing. You could have a £4 billion business and make no profit, what's the point? I'd rather have a £1 million business and make a £500,000 profit.
Absolutely. But the other area where people go wrong, and I think it's one which is driven by legislation more than decision making, and also not taking correct advice, is where the tax laws create a sea change in their cash flows. Great example is corporation tax. Once in a single company environment, as soon as your profits reach a certain limit, you have to pay your corporation tax in advance. And that's based on an estimate. And that can cause big issues with the bank lending and covenants. And there's the other one where many times I've been called into a problem where their annual VAT is £2.3 million, and suddenly they realise they have to pay their VAT in advance. You no longer got the luxury of paying it at the end of a quarter. You've got to pay 3 payments and then a balancing payment. And you see the essence of that mistake of people going wrong is not seeking proper advice at the right time. Yeah. And people not realising they're outgrowing their current accountants. We see it all the time. Yeah,
and we've just had lunch, and I want to pick up on one of the conversations that we spoke about at lunch, because I think it's really important for whether you're a startup or not. But something that, as a business owner when I started, I wasn't really aware of. What's the difference between, in simple terms, you've got a bookkeeper, an accountant, and then you go more to the advisory kind of, I think, way kind of use it. As a business owner, what is the difference between those 3 pockets, and what should you be considering when you think, do you just need a bookkeeper, or actually do you need the accountant, the advisor? What's kind of the advice that you'd give business owners on that point?
Yeah, the advice to give business owners, especially on a startup, is everyone's looking to save money. But once a business is actually performing, operational, a bookkeeper will produce the raw information. A good bookkeeper will probably take that information to an early set of management accounts. But a bookkeeper traditionally would not notice, even if a software package generates a whole lot of information and reports, an accountant stroke advisor will look at those reports and say, that's not right, and we'll see it straight away. And then you get the next level as the business moves on, and you have to get more business-like. A bookkeeper will not see the value of projections, budgeting, variance analysis, and that's where the business advisor stroke accountant comes in. And on numerous occasions we will give this advice, and then we will actually push the client to go and buy in that financial controller stroke financial director, because that financial director will certainly not be doing the bookkeeping, because you don't have the most expensive asset doing the cheapest work. So that's the difference. A good bookkeeper will produce accurate information, but it's how you use the information is key.
So that's what a bookkeeper do. They just get the numbers, put them together, and produce some information. There's nothing to do with where you're going, what you want to do, what your future is.
Generally speaking, bookkeepers won't. I don't want to belittle it. It's a very important factor.
Yeah.
Of
it is, but that bookkeeping has cost me a lot. Bookkeeping, the accountant, their own accountant has cost me a lot, as I've spoken to you before.
As someone on their business journey, would you say like a bookkeeper will see a company to a certain size, and then it's about, after that size, getting in the accountant, and then after that size, it's about getting in the kind of tax advice and the actual serious future planning, and
that's what will happen. You might not grow out of the bookkeeper. The bookkeeper may still be there, because if a good bookkeeper is worth their weight in gold, because they're the provider of the information. But you need somebody who's got vision, someone who's got an empathy with the client's business.
But with your knowledge, I imagine, I correct me if I'm wrong, Stuart, but I imagine with your speciality and skills and where you work with businesses, I imagine you, with certain instances, you often get to them when the damage has been done, and you're there to support them get through that. Flip that on its head.
That's me.
How much better?
That was you, yes.
But how much better would businesses be if they engaged in you from day one, and then you then understood the goal, as opposed to you coming in once the problem's happened?
It would be a lot better, because we can set the milestones with the client, and the client just dictates what those milestones are, and then an accountant stroke business advisor will be able to say, well, this is what you've got to do to get there. So to deliver this result, we're going to have to do this turnover, this profit, this margin. And to do that, that will require, and he'll project the working capital required. You go to the bank, early. You don't go to the lenders late. The last thing you need to do is go into the lenders after you've made the wrong decision. The key element to that is, it's an interesting one I've seen over the years. People don't borrow enough money. They borrow what they think they need, not what they need. And how many times have I seen borrowing fail, not because the clients failed, but it wasn't the right amount of borrowing for what they were doing.
But I think that's a massive. I think what you've said is you've hit the nail on the head there. And actually, I could hear Mike in your voice then, because for the last since I've known Mike,
borrow.
So you've taught him. You've taught him well.
As long as it is for the right reason.
But I do think there's a massive gap in education as to, again, for me, I always said with Mike, for me, borrowing was a sign of weakness.
No,
and that's and that's through my childhood. It was like you shouldn't need to borrow because you should have enough to, That's for me. It was a sign of weakness, just in my kind of, I guess, the way I was brought up. It's interesting because, and that's how I then saw it in business. I thought I can't borrow money. I've got to do it on my own 2 feet. So me and Mike then have very different mindsets.
So one of my son's mentors, who's a very successful entrepreneur, when that person talks and you ask them how they got to where they are, well, she said, it's very nice of HSBC and Barclays to lend me money when I was younger. I needed money. You can't do it by yourself. You've got to borrow from the banks. You've got to borrow from the lenders. And as long as that's sensible funding, why not use it?
Mm. But that's, I think, I don't want to get too political here, but I think that's a huge gap in the education system, in the sense of, I don't think kids, from school all the way up to their teens, I don't think they're taught about the value of borrowing, and I don't think it's...
One of my business partners, he's always believed in that, how he's always built his own businesses outside of the practice. He's always believed in borrowing. And there are other people that don't like borrow, don't like debt.
But I guess you've got, there's still a valid decision there in terms of, can I afford the repayments, right? It's not just borrowing.
But that's part of where we just discussed. When you actually go for the lending, can I afford these repayments? And you make sure you do that. But that's all part of the business and the business modelling of the forecast.
Yeah.
So you might, by setting the goal as to what you can afford, you may not borrow enough to actually generate what you think you're going to generate.
Yeah.
And that's why the projections are so important. I mean, business modelling, people, you see these forecasts where the cash is growing exponentially. You think, the bank will like that. Well, the bank won't like that at all, because they're looking for certain ratios and key gearing. The people I work with in the franchise world, the banks know exactly what they're looking for. So if you set up a restaurant and start showing exponential cash after 1 year, or 2 restaurants or 3 restaurants, they'll know it's wrong, because you can't generate enough cash to pay back the debt in the early days. Mm. The coffee shop industry, which I've dealt with 3 or 4 different franchises, it takes time. And of course the balance sheets are incorrectly balanced, because you've got a lot of debt in the early days, but you haven't got the profit yet to pay back that. You've still got to pay back the debt. But it's understood by the banks that that's what that type of business will look like. So if you were setting up an accountancy practice, you wouldn't have a balance sheet like that after year 1. But after year 1 in a coffee shop, or any chain of coffee shops, of course you're going to have the debt, because you've had to have a massive fit out. Unless you're putting your own money in, it's going to be debt on the balance sheet. But they expect that. But people don't get that. Credit agencies, I fear, don't understand that.
Yeah, they don't understand that.
Yeah, we've had our issues, Mike, with credit agencies not understanding that. But that's where people go wrong. There's nothing wrong. I know certain franchise models expect the balance sheet to be negative for the first 2 or 3 years.
Amazon, all the biggest companies in the world, they've been negative for like 10, 15 years before they exploded, because all the money was going into investments and they borrowed.
Absolutely. I think I've told you, Mike, many times. I was the first accountant in one of the biggest online bank, I think, virtual banks now. We were the first accountants. And they started actually on zero bookkeeping. Now you look at the size of this business, it's worldwide, it's everywhere, but they were raising hundreds of millions of pounds in the early days to fund their losses. But they weren't losses, they were marketing costs. They were buying in their clients. And that's where people go wrong. They think by borrowing or taking in other people's money, oh, that's not a good idea. I should be making more profit. Sometimes you have to invest to accumulate.
Stuart, it takes real guts to wake up and say, I'm going to borrow large amounts of money. 4 or 5 years ago, you actually made me borrow nearly £250,000. And thank you 5 years later. But for the first 6 months, I think I hated you because I never slept in a nice way. That's how much headache that caused me, because I didn't understand the importance of borrowing.
But
so
that's
where. So you see, I learned the hard way, because first, as you know, I made some very wrong decisions with investments.
Yes.
Then you came on board, and we are still working on recovering from these mistakes. But what I've seen since I've worked with you is that things have started moving rapidly because of having the right person next to me. What would you say to people, how important it is for people to actually, instead of trying to save money from an accountant, and we've had this conversation before where you hear people say like, oh, I've done my accounts for 150 quid, and let's not go down that route at the moment. How important it is to have the right person? What would you say? Because it takes guts. It takes guts to actually go and find the right person and borrow at the same time.
That's a really difficult question, interesting question. But when I advised you that all those years ago, I wasn't just thinking of your cash flow. I was thinking of the tax benefits.
And the big picture.
And the bigger
which
picture.
I couldn't see at the time.
So maybe that takes us back to earlier when we discussed about a bookkeeper. It'd be unfair to expect a bookkeeper to understand the capital allowances and the tax nuances of leasing. But I knew that if we leased in a certain way, that we could get the tax allowances and also protect your cash for the future. When you're looking for a good accountant, you're looking for somebody who can have empathy with you. I think there's always two aspects to it, actually. One, can they do the job? And are they going to be able to do it? And secondly, can I get on with them? So whenever I employ somebody, it's not a case of, well, they can do the job, but I've got to be able to get on with them. And it's probably no secret in my office, I can sometimes not be the easiest person to work with. But you
really?
But you deliver what you promise, easy. A great example was a colleague of mine from our tax team, where he gave me a schedule and then asked him to make a couple of adjustments. He came back to me and I said, this is very different. What's happened? Now, you could get some people who would argue with you and say, oh, no, it's not. He goes, I'm an idiot. I love that. And from there onwards, our relationship got stronger. So it's someone I could work with. And that's what I would look for in an accountant. It's got to be someone you can work with, who's got understanding of your business, and more importantly, there's a mutual respect. That's what I think you've got to look for.
Do you think that there are actually very few people who will fulfill all the criteria that you just laid out?
I think there's a lot of people who think they can, but a lot of it does come from experience. So, is there a shortage? Yes, there probably is. But are there other people that can do it? Of course there are. Of course there are. I'm not unique, but there are people out there that can do it. For example, if you came to me for a corporate restructuring, I would ask someone else to do it. And it's knowing your strengths and weaknesses. I think that's the important thing.
I find it interesting with the accountancies. Yeah, if I want to get a refrigeration, let's say I'm a commercial and I want refrigeration, I can do my research. I can look at Mike's work. I can see testimony, and I can physically see the value adds for his clients. I've always found with accountants, how do you choose the right accountant? Because it's very difficult for an accountant to have a portfolio, or almost like the tangible stuff that perhaps Mike would have as refrigeration and us as software and apps and things like that. You see the tangible benefits.
That's a great question.
How do you choose the right accountant?
I think that's a great question. Because there's been a proliferation of online accountancy firms on fixed amounts per month, or for doing work, and I think even as a medium large practice, we sort of thought of how they're going to make any money, and they don't, because all they're offering is a sausage factory. How do you actually, the added value, how do you demonstrate it? Again, I think that comes over in experience. I would always demonstrate, and I'm sure my colleagues always demonstrate their experience by using clients' examples of what they've done and validating themselves. When it comes to tax disputes, I will validate myself with a number of cases I've been involved in, and that's how you demonstrate your value. You'll demonstrate, you can say, speak to client X or client Y, and they will tell you what I did for them.
Yeah. And for someone listening to this that perhaps is thinking about an accountant, is it okay to ask an accountant to give that experience? Because I would have assumed that perhaps some of it's confidential and perhaps some of it you wouldn't be able to share. So is it generally okay to have that conversation?
I think it's generally okay to have the conversation because if you ask me, say I've got a tax dispute on sideways loss relief, by way of example, being a highly technical one, I'd say go and speak to my client who I dealt with a case back in 2017. But before you did that, I would have spoken to him and said, is it okay if I can discuss the details of the case? Because there'll be other details which possibly haven't been reported in the case. So that's, I think it's a conversation you can have. I absolutely do. I do believe that it's not a conversation you can have to validate what you're buying. But I think the moment I like the new client whose last question to me is, and can we discuss fees? Not the first question. So that's something you should always be looking. I'm always looking for, because the fees should follow the service. If you're delivering the service, the fee should not be a problem. So it doesn't really need to be discussed, in my view. I will give the client a ballpark. With a tax case, you can't give a ballpark, but you could have a client I'm dealing with at the moment who hasn't, who was given wrong advice over to do with VAT registration, and I haven't got a clue what the fee's going to be, because at the moment we're dealing with tax penalties, 9 years of unpaid tax.
Wow.
I've got to deal with it with the HMRC about deferring the tax. I've got to deal with the lawyers to help them prepare the case. And it's alleged, I should say very clearly, it's alleged incorrect advice because it hasn't been tested yet. I can't see how it's going to go any other way, but it may go the other way. So you can't. But then why did they come to me to deal with it, and why have they been satisfied with the service? Well, it's 2 years down the road. They needed 2 years to be able to recover from the damage that they perceived was done. I bought them the 2 years, and at no stage, when my colleagues have been doing the accounts or I've been doing the technical and the tax work, have any of our fee notes been disputed, because they perceive the value. And that's what I think from an existing, they didn't ask for any fees on day one. They knew there was a problem. So it was actually reversed, in fact. The actual problem was reversed. That once I'd actually committed to solving it for them, it didn't matter what the fee was, I had to deliver.
Yeah.
And did I have a path to deliver? 90% of it I did. 10% of it was I'd never seen before. But I knew there'd be a path to deliver. There had to be. Every problem has a solution. And absolutely, it has to date worked. I mean, the situation was their insurer's lawyer didn't want to take the case on. And I had to convince him that there was a problem. And he went to a forensic accountant, and I said, look, that's what you need to do. You need to speak to a forensic accountant. He then said, yes, I agree, there's a problem. That problem hasn't been tested yet, so it's only an alleged problem. But we'll wait and see. But that's how the relationships start. This was a recommendation from a lawyer who knew me through an insolvency practitioner and knew that I was a bit of a street fighter.
It's really interesting about the way that you say about we nearly introduced you as a street fighter, so I'm glad that you said that, by the way. One thing that, since with the resurgence of kind of AI, it's one thing that we're changing our model around a little bit as a business, because I want to pick up on the fact that you said about the value.
Yeah.
And actually, we're getting to a point now where we don't quote by hourly rate, we quote by value. of what value are we going to bring to the table by delivering this, which, is a combination of specialist expertise and AI. Actually, it's all about what are we worth now, what the value we're giving, not is it going to be 10 hours, 20 hours, 1,000 hours. It's what is our value worth to that individual.
I agree, but
Value.
we're not seeing. I think Laura's seen it more than we are. But I was on a course earlier this week and learning. There was a tax case where the tribunal chairman has apparently got extremely upset and hasn't penalised the applicant yet, who used AI for his case. And as it was put to me, these aren't my words, AI hallucinates tax cases. And we're seeing that AI, there's a trust in AI for basic research, but you would never trust AI for that final product. In a recent case that I dealt with, I wanted AI to have a just look at my English, and it changed some of the way the way the letter was presented, and I had to put it all the way back to my original draft because it actually changed the context of the letter. Because what AI hadn't done wasn't able to build into the letter the human relationship I'd built up with the individual at HMRC. Didn't know that. I didn't know that we were on a relationship that was looking for a solution. So it changed what was by my standards, a passive letter into a very aggressive letter without realising it. So AI, it has changed, but AI can never deal with a human relationship, in my view.
Yeah.
It can't work out it won't know how to read a room. It won't know how. I always, before I start, I think back to a very, very old case, which was dealt with up here in Birmingham, strangely enough. And the inspector herself had to go off to have a cataract operation. And I didn't put her under any pressure when she came back. And the first question I asked when she came back, so before we start, can we just discuss how's the operation gone? Which that's very nice of you to ask. Now, if that had been AI, and this was in 96, 97, but if that had been AI, they wouldn't have known that. You'd have to tell. AI is only as good as what you put in.
Yeah.
So it can do research. So yes, you might say, can you find me some cases on sideways loss relief? And Beacon versus HMRC will come up, because it's now become almost a leading case. But I don't believe AI is going to change our profession, because it's so much. We're a people business, accountancy. Fundamentally, we're a people business, and AI is machine. It's mechanical. So I don't see AI as being a challenge to us. In the medium to long term, who knows what it will be able to do. Yes, of course it's able to process accounts. Of course it is, but that's a process and that's mechanical. But I guarantee if I said AI will not be able to know every posting in a set of accounts. So I don't see AI I see it as an opportunity, not a threat.
Is HMRC using AI at the moment? Because I believe they're investing in it quite a lot.
I read recently an article that they bought 28,000 Copilot licenses. So yes, they are using it. And I did write to them on an inquiry case, and I asked them, can you advise me whether AI has been involved in the answer? The reply was very terse, no. But they are using AI. But what level, I don't know. I haven't got that insight.
It's interesting because I was speaking to, again, someone last night at an event I was at, and they were talking about AI agents now being used in organisations. And this specific, I don't know the company or the details, but they were using AI agents basically as over the phone. So when you call, you're speaking to what you believe is a human, but it's actually an AI agent. And they've now realised that these AI agents are negotiating better deals than any human has ever negotiated over the phone. And the people on the other side genuinely believe they're speaking to a human being. Now, that's scary, isn't it?
That would be very scary, but at least they might answer the phone, which HMRC don't.
I love it. So Stuart, I want to go into a bit
I
of...
think people are so desperate. It doesn't matter what's on the other side of the phone. Anything that gives an answer sounds good.
That is good. I love that. I do want to go, and Mike, you're going to have to just stay seated while I say this, but I want to talk about tax efficiency and tax in general. And I know Mike has some strong opinions around things like this, so just stay calm for a moment.
Well, my opinion is very simple. Sorry to interrupt. That in business, any business, after health, your accountant is by far the most important thing in your life. And you will not get a good one by believing that they're going to cost you 150 quid to do all your books for the whole year.
We know that, Mike, don't we?
Yeah, but yeah, that's my opinion of.
But I've got two questions. I've got two-part question for you, Stuart. I think part one, again, just for the people listening. Part one is, what does being tax efficient actually mean? So hold on to that thought. And then secondly, what's the difference between tax avoidance and tax evasion?
I think it's one of the same. Evasion is absolutely wrong. That's fraud, theft, whatever you want to call it. You're evading the law. Avoidance and efficiency probably could be linked together, because we discussed earlier Mike's leasing. Now, the efficiency there was we used the capital allowance law very efficiently. Another great example of efficiency versus avoidance, and with avoidance, is a close friend of mine and client. He does like his electric cars. I think he likes the 2% or 3% or 4% benefit in kind charge even better, and he certainly likes the 100% capital allowances. So he's avoided the high level of tax on a car benefit by buying electric cars, but he's also been efficient because he's got a car he wants, and he's got a £120,000 car, but there's no evasion there. He's following the law. Evasion would be where you didn't report the fact he had a car at all. So there's the differences. He's been efficient, and I think that's a really good example. I actually think that's an example that really shows how efficiency, if you can live with an electric car, which I can't, being a complete petrol head, do it. We will always advise our clients to do it, but here where it dovetails into the last part of the conversation. The next part of that conversation about advising a client how to be efficient with the cars is always to remember, if the client says, "Oh, I didn't like that electric car after 2 years, I'm going back to petrol," and the car's still worth, say, his £120,000 car is worth 60,000, he's got to pay back tax on that 60,000 he's going to get back from that car. He's had £120,000 of allowance. If the car depreciated to zero, there'd be nothing to give back. But because it's still got a value, you do have to give back. And people seem to forget this. So that's maybe the difference in value added, just that little touch of advice to the client. Now, a bookkeeper may well say, well, if you have an electric car, it's very efficient. But will they actually remember tell the client that they don't have in your back of your mind? So that's, I think, also where everything is coming together from what we've been discussing, how the difference in a bookkeeper, an accountant, value added, and also tax efficiency and tax avoidance.
And obviously I think the way that you describe it is very kind of black and white, and I like that in terms of the efficiency. Yeah. But there will be accountants out there, or advisors, that toe the line between, presumably, would there be accountants that perhaps push you a little bit further than others? And again, I'm thinking from a I'm looking for an accountant. Would you avoid anyone that tries to toe the line too much towards the?
Well, you've got.
Well, the truth is, Stuart, we've spoken about this, that when it goes wrong, who is ultimately liable?
Ultimately liable is the taxpayer.
Exactly. You, the business, the client, is always liable for what happens. So this is why it's important to have the right person and not.
But this was a really interesting question. We're getting a lot more regulation as accountants now. We have to be authorised. Since the 18th of May, you've got agent authorisation with the HMRC, and you have to follow a certain standard, which we follow anyway as a chartered accountants. But more importantly, what you just discussed about people pushing the line, I think it's really interesting. there over the years, you must have heard of film schemes.
Yeah.
Yeah.
And
Where the rich people and footballers put their money
and
in.
what you'd always hear is we've taken legal advice or we've had a counsel's opinion. Fantastic, and some of them are leading counsel. Whenever a client came to me with this, so I had a client come to me with a scheme that became known as Icebreaker, which didn't work. He came to me and said, "Oh, they've got legal advice. They've got leading counsel." I said, "Can I see counsel's instructions?" Counsel will only opine on what he's asked to opine. So you always are, when people say, "Oh, this person's got this scheme, that person's got that scheme," I can assure you we will have seen that scheme. And if it's got the word scheme on it, you don't want to go anywhere near it. I always believe that you've got to play it with a straight bat. Always play it with a straight bat. And as long as you're playing within the legislation, and now there's the revenue actually issued a standard, whether it actually becomes, it's in I believe a draft, that they're saying that you should only advise a client if something has got two versions and two opinions, you should go with the one that is most likely to succeed. Now, there's a lot of people saying, well, how are you going to know what's likely to succeed until you go to court? But I suppose there are probably examples where it's so obviously wrong. But just so if an accountant's saying, oh, I can do this for you, I can do that for you, ask yourself the question, if he's so good, why is not everybody doing it? If something's too good to be true,
Yeah.
Because there are things you can do. So, but a great example from tax efficiency and where you can actually save the client money without doing anything particularly clever is advising them if they've got to have life insurance. Just say to them, have you thought of relevant life insurance, which is very tax efficient. So there's a good example of tax efficiency, whereas a normal life insurance policy, which is not as tax efficient as a relevant life insurance policy, RLI. So that's where experience comes from, and you know that's the right answer for most clients. And an accountant will save you the money by doing the correct things. And there's also value in paying you. I used to have clients in a certain part of the country who people would think they don't want to pay tax, but they did, because they thought to themselves, well, if I've got to pay 80%, if I pay 20% to the government and I'm keeping 80, it's not such a bad deal, as long as I'm paying the right amount. And by being on the straight and narrow, I think you also find, and it's very important, that you're not looking over your shoulder every day. And looking over your shoulder every day, there's a value to that. You're actually spending money doing that. How much? I mean, when you don't see too many big fraud. I don't see big fraud inquiries. I see more technical inquiries about how things have been. Something might not follow procedure, or somebody's filled a form in the wrong time, or that maybe special relief claims are what I'm having to deal with quite a lot. But these aren't fraud cases. But I can tell you, I've only dealt with a small number over the years. You simply don't want to be there. It's a different level.
With obviously a lot of the changes that are happening in government, and obviously it just feels now that just taxation is getting more and more and more. What's your advice to organisations thinking, about going offshore and all that sort of thing? And what's your advice around what should businesses be thinking about now with just taxation becoming just harder and harder and harder and more and more and more?
Extremely a lot harder, yeah.
Taxation is the highest it's been since the war. And we know we're in a very high... I always tell clients we're in a very high tax society, so don't beat me up over the fact of what your tax bill is. Offshore, generally speaking, doesn't work because there's a lot of anti-avoidance legislation. I've got a client, strangely enough, and it's quite an interesting story, who is properly offshore in the Middle East. And when I spoke to him, I said, you going to come back to the UK? He said, a few rockets flying over my head versus UK taxation. I'll go with the rockets. But he's properly overseas. His business is carried out overseas. He's living overseas. He has no connection to the United Kingdom. He is properly overseas. To be properly overseas is very difficult these days to be non-resident. And it's a quality of it. The revenue, look at the quality of it if they challenge you. And my advice, it's a very difficult question because there are clearly tax structures where you can go overseas quite legitimately. But you've got to be operating overseas. You can't just say, I'm going to put a nameplate up in Tortola or the Vanuatu Islands, that doesn't make you overseas. It just means you pay tax in the UK with a registered office on the Vanuatu Island.
Yeah. But you say we're at the highest rate of taxation since the war.
Yep.
What does the landscape look like beyond this? Is this going to get worse or is it going to get better? What's your opinion?
My opinion is I can't see how it can get much worse. Anecdotally, one knows that you're seeing the current revenue debt increase. Anecdotally, number of insolvencies increase, which means tax won't get paid. So you can put it up to whatever rate you like. If people can't afford to pay it, they're just not going to pay it. It just won't get paid. So my opinion is we might see some subtle increases maybe in the next budget. I know nothing more than anybody else, but
So more increases then.
I think there might be subtle ones, but I think we will start to see subtle changes. We've seen the subtle change in the summer with the kids' attractions and the VAT. But but again, that's a really interesting point. When you look at the legislation and the guidance around this VAT reduction, it's horrific. So a good example is, and this is where the horizon looks like. A good example is one of these attractions where they sell you a day. You might have bought your pass to go on the 3rd of August, and I've paid for it now. There's all sorts of rules surrounding that. There's all sorts of rules surrounding the second, if you go there and buy the second day, but it's linked, is it a composite supply for VAT purposes? You bought the first day and you bought that. And taxation has got complicated and that's one of the biggest problems I think it's facing. I feel, it's an opinion which it's my very own view, that it's the HMRC themselves are struggling with the legislation. Because remember, it's imposed upon them. They don't. They just have to implement government policy.
They're following the rule book.
They're following the government policy. There's a lot of stuff in their own manuals, which is their own view of the matters, which is being challenged. But I think the horizon is, I can't see where decrease is coming from. I think, if anything, there's going to be subtle increases. The corporation tax is not so subtle. We're going from 19 to 25%. National insurance has been a disaster for certain industries. I mean, the hair industry, for instance, has suffered terribly because it's suffered a triple whammy. The national insurance has gone up, the VAT, the national minimum wage has gone up, and the high street rates have gone up. They used to be able to. Their model is based on juniors being paid very low money, and that's how their model works. So I think we've got to look at how taxation is now driving certain industries away, possibly driving certain industries to make changes from where they were very good industries to work in to be.
It just doesn't make economical sense to me in terms of why are we making people think differently? People are too scared now to set up a business because of the cost. People are too scared to employ locally because of the cost. We're creating an environment which is just...
cost is only one element. From my point of view, and I as I said, I get very, very involved. I'm very empathetic to my clients. I get involved in many aspects of their work, which is probably one of the strengths that I've brought to my practice. Is I will have a toolkit around me. I will know the best HR person, the best HR lawyer. I will know the best commercial lawyers, and I will pick from my toolkit. But one of the things you become the trusted advisor. And one of the things you hear time and time again is tax is a problem, but it's employment law and employment rights give people the biggest headache in a small business. And I think we've got to look at everything in the round. And as a business advisor, if you're talking to a new client about setting up a business, you have to be aware of all the other aspects around running a business. It's not just being taxed. And that's probably, again, when we can just dovetail that back into your earlier question regarding what you look for in an advisor. Has that accountant on the first meeting also brought things to the table and you think, I hadn't thought of that. And that was my first meeting with Mike. I actually said to him, I think you're on a voyage of discovery, Mike, now. We talked about things that I thought were very basic, and I always find that a lot of times when I take over new clients, I find that pensions haven't been dealt with properly. And it's and that's an aspect where you see massive savings. You've got to try and talk to people. I'm trying to talk to my 29-year-old son about his pension, and he's telling me, "Dad, please don't bother with that." But he needs to be talking about his pension, because if you start too late, and that's what an advisor will do. He's not just telling you what's the now and where you've been. He's giving you the markers as to where you're going to go. You'll be talking about inheritance tax.
That is.
But it's now a very hot topic. What now? The residual of your pension is now from the 5th of April 2027 going to be included in your inheritance tax calculation.
How wrong is that?
If you speak to my younger partners, my younger colleagues, they don't seem to have a problem with it. It seems to be the generation that maybe I'm in have a problem with it. But
because you worked all your life to build something,
but you do get tax
and now
relief.
all of a sudden somebody feels like they can take it away.
But you can get tax relief on the money going in. So some of the younger partners feel that, well, what's wrong with that? You've had the tax relief going in. You've had the growth free of tax. But, of course, there's the mindset from our generation that I want to hand this on. And we can look at the farmers as a great example. The government didn't actually work out, well, hold on, there's dry tax charge here. How are they going to keep the farm going? And that is what I think we're going to see more and more, is these dry tax charges coming in, where tax is levied, but you don't actually earn anything. The mansion tax. There's a dry tax charge.
Why do I feel that there is no point anymore for me to work 18 hours a day, 7 days a week to build something? I just feel like there will be nothing at the end of it, because it will almost all of it be taken away. Because
that's your perception. And as I was once told, if I wasn't told 100 times, once I was told 100 times, perception's reality. And the reality is, Mike, you've got to accept there is a lot of tax. You're paying 25% on your profits. You're paying money when you take the money out of the company. You're paying tax. You're paying tax. You're paying VAT on your personal spending. And when you finally wind the business up, you've still got to pay tax on that. Business asset disposal relief now has been cut to £1 million at 10% and the rest at 20%.
But you're still going to be giving, I think your mindset is that they're not getting the full amount, but they're still going to be getting more than they ever would because of the legacy that you've built,
yes,
right?
But I think where the problem is wealth creation. That's what's becoming harder.
Wealth creation is
becoming harder.
What do you mean by wealth creation?
Well, building up your own personal balance sheet. Because you have to, as soon as you build it up, you have to pay the tax.
So that you mean outside of the business now?
Well, it's linked. When you're a small business, it's all linked. But the wealth creation and actually building the business itself is difficult.
In other words, it has become extremely difficult to build any wealth.
Yes, I think so.
It has become extremely difficult to keep that wealth, and it has become almost impossible to pass it on.
Difficult to pass it on without tax, yes, without high levels of taxation, yes.
So what's the point of working like a donkey then to achieve something? Or is there a point anymore? Because a few weeks ago we spoke about this, and I did clearly say that if I was to start today, I would not start a business, I'd move somewhere else or try something else.
But that's when you get into the fact, is it a lifestyle business, Mike? Or are you going to build a business you want to sell in the future? Because if you want to build a business, that's where the wealth creation will be. If you want to sell your business in the future, which we're actually working to.
Yeah.
That's one of our goals, our milestones. And for your business, it's now growing, but we can see the growth in it, Mike. We see the growth.
But Stuart, let's say you build a business and you are left with a few million.
Yep.
First, everywhere you spend that money, you pay tax on.
Yep.
And if you're unlucky enough to die, that money will not go to your kids without being taxed again.
Correct.
So what's the point of building it?
Because, as was just said, you do keep something, just not keeping as much.
I mean, if you I don't know the exact calculations, but out of that 2 million, let's say your kids get one. That's 1 million more than
calculation.
That's 1 million more.
Do you see what the system has done to all of us? Yeah. It has actually made it has actually made us accept anything they throw up on us without a fight. The system has actually it's making us go down this route, whether we like
Is
it or
that
not.
correct,
And
Mike?
even as little, I mean, why should we be left with as little as possible?
But is that correct? Look at the farmers. They fought. It's not brilliant what they got, but they got a very nice change in the law. There's been a change in the law over the winter fuel payments. I don't think we have to accept it, but the government are constantly testing us to see where the limits are. They are testing it where the limits are.
Well, businesses closing, people not going into it, extremely difficult to
think
operate
pe-
and survive.
I think people are. I think people aren't going into new businesses because the margins are lower. I don't think it's taxes. I don't think tax is the big issue. It's a big issue, but I think it's not the most important issue. It's getting the right margin now because the cost of raw materials, the cost of staff. Is the business viable in the first place? Forget tax, because if it's making a loss, you don't pay any tax anyway. So so certain businesses that may have been viable 10, 15, 20 years ago won't be viable. I ask you the question, other than it's mostly probably succession planning, but the accountancy profession itself, subject to major mergers. Accountancy practice is being bought up all the time by the consolidators. But why? Not because they're not profitable, it's because staffing, lack of experience, succession planning, and people want to get out. And that's why so people who have bought out will get their wealth out.
But Stuart, just to finish off, I just want to ask you kind of one overarching question that hopefully will be useful to people. So, in your experience, what is the one thing every business owner should know about money, but most don't?
As I said earlier, cash is king. They should realise that you can easily make profits but run out of cash. And businesses fail for running out of cash, not for lack of profits. But they should understand, in my opinion, the most important element of a business is the balance sheet, not the profit and loss account. And they should understand their working capital management. That if they're buying and selling goods or any service, work in progress for professional services, goods for goods, staff for the hairdressing industry, restaurants, staffing and foods, is there enough money on the balance sheet to fund the assets and the costs, not the costs so much, the items on my balance sheet, such as stock. Understand working capital and revolving working capital, because that's where so many businesses go wrong.
Working capital.
Yeah, working capital. Working capital management is so important to know, that, because if you've got enough working capital, you'll have enough cash. Even if that means borrowing from the bank, you've got to know when you need to borrow from the bank. So allied to working capital management, having proper projections, having realistic projections, and knowing how to flex your projections and manage those projections and make decisions on those projections, and not just using one key performance indicator, having 5, 6, 7, 8, as many as you want, key performance indicators, which will help you understand the business, and it will let you make those decisions that you need to make, and make them before they're causing a problem. I was teaching another client recently about a moving average. Rather than just looking at turnover in 1 month, let's look at it at a quarterly basis, but let's move that along 1 month, and let's make a graph of that. Well, we've done that. We've looked back over 2 years, and it's taught us a huge amount about the business, where the actual fluctuations are. And that's what you see. That's what they got to know, how to spend time running the business. They don't work. They want to work on the business, not in the business. Very critical.
Something you're working on.
Yeah, we've spoken about this big time. Difference between working in it and on it.
Yeah, well, that's unbelievably important, because the man that's working always in his business can't see. It's the helicopter view.
Yeah.
You've got all these management speak, overarching, and that's my job. My job is to actually look at everything and tell you where you may be able to tweak it or not. But generally speaking, that's what the most important thing is, knowing where the business is going and being able to drive it there. Bumps. Every business has bumps in the road. every business has to deal with changes in tax legislation. No one's unique. And to actually understand, no business is unique. Some are more complex than others to understand, and some are easier than others to understand. And also, not to be scared to put your hand up and say, I need some more money, investment, bank managers. That's the key to any business. I don't think. I think if you look at, because I used to act for a business that's in the building hire industry, tool hires. And when they came to us, it's a very sleepy business. And myself and one of my former colleagues, we worked on with KPIs with them, what you can measure, you can manage, and we worked with them to understand their own business, to understand what their business is. And now this business, which is very, very much based in the south of England, it's probably the second or third biggest, and they've grown themselves, even with some big bad debts, because they do everything they were taught to do, and they understood their business. So that's probably the most important thing, is understand your own business, understand your customer. Business, your profit is only the amount of times you do business with somebody times the margin. It's as simple as that.
Yeah, it's simple when you put it
It's simple like that. Well, that's my job, is to make it simple.
Sometimes we overcomplicate everything, don't we?
Well, my job is to make it as simple as possible so you understand it. I can talk in accounting terms all day long, but that doesn't get you anywhere. So that's how I see it.
Well, Stuart, it's been an absolute pleasure to have you on the episode today. This was probably one of it's unplanned, but one of the most enjoyable episodes we've done. So those are always the best. So on behalf of myself and Mike, thank you very much.
Thank you very much for inviting me.
Pleasure having you today, Stuart. Thank you very much for all the information. And I'm pretty sure we're going to have a lot more of this, because I think taxation is something we can talk for weeks on end.
Yeah.
Oh,
Episode 2 to follow.
Yeah.
Episode 2, the trials and tribulations of dealing with HMRC.
Episode 100 to 200 will be all about taxation. So
we've got a new podcast here, guys.